I've sat and listened to a number of the presentations this morning, and sometimes at a conference it's important just to go back and touch the foundation, remember where we came from and why we're doing some of this stuff. And so I'd just like to quickly look back at 300 years of financial services, and there's a reason for this. 300 years ago, the biggest innovation was the Bank of England introduced printed cheques, which every bank in the world copied and used and still uses today. So sometimes innovation starts somewhere and it just spreads all over the place. Card payments, in fact, there was a big gap for about 200 odd years when the only real innovation was the invention of the postage stamp. Card payments arrived in about the 1950s, followed by SWIFT, followed by e-commerce, followed by online banking, and then self-service started to arrive. We started to understand that our customers wanted to help themselves. They weren't prepared to accept the fact we just delivered stuff to them. They actually wanted to receive their products and services and have some choice in how they were delivered. We also had the global financial crisis in 2007, and some would argue that it's still going on today, and some may also see some of the remnants of that re-emerge over the course of the next couple of years. But effectively, challenger banks then started to emerge as a result of a push by the regulator to try to open the market up. But this wasn't really new, because back in 2005, the European Union had looked at PSD1, looked at how they could start to open the market up, try to break the hold of the major banks and try and encourage some competition. The problem with PSD1 and the global financial crisis was that those two events collided, and so the access to services that the PSD1 entrance required was blocked out due to the banks doing what they normally do following a recession, and that's to scurry to rebuild their own balance sheets. And it's only the fact, over the course of the last 7 to 8 years, that you pick up newspapers and the word Fintech appears, and it's become commonplace, and everybody talks about Fintech. And when I was setting up my business, we lived in .com era, and that was the buzzword then. You were a .com. Nowadays, it's a Fintech is the word that lights people up and effectively moves them forward. All of that has an impact on our market suppliers and customers. One of the things that happened then as a result of PSD1 and all the rest of it is that many businesses sought to seek access to payment rails, to find out, to try and get to a competitive position. They wanted access to the national payments infrastructure. They knew they needed that, and everybody in this room knows that you need to get access to transactional banking data one way or the other as part of the credit decision you take if actually you're going to be doing lending. Because that transactional data gives you the instant view as to whether historically somebody's been able to afford and repay what they borrowed, and it allows you to project forward to decide whether in the future they're going to be able to repay what they're now looking to borrow. So it's vitally important. And various card schemes, various other organisations tried to deepen their product offer to meet some of these demands. There was a problem, however. The legacy platforms that underpin all of the transactional banking services are old. Okay, it's only 50 years since we invented SWIFT, but dinosaurs don't have a predetermined age, right? Things come and go, things move forward. And from the arrival of the commercial internet in 1995 and the arrival of the first search engines, everybody started to understand that things work in a slightly different way. The other thing that happened also as a consequence of the arrival of the commercial internet in 1995 was that all of our purchasing habits changed. Everything went upside down. It was almost like an invisible tsunami went around the world, and we all missed it. All right? But if we think about how we consume products and services today, we snack holidays. 20 years ago, we used to go to a shop, get a brochure, look at a brochure, decide where we're going to go, book 2 weeks, take the kids out of school, and go on holiday. Today, we can make a decision this afternoon that we're going away this weekend and book it and pay for it. So all of those things have changed. E-commerce has transformed the retail market space. 20 years ago, everybody in this room would have relied upon a 30-mile radius of where they lived to do most of their transacting. I remember when we set up the internet, we did some work with WPP and Martin Sorrell, looking at how people transacted and where they consumed. That's all changed, right? Because you can shop globally as opposed to locally, everybody's consumption of services is different. That is really going to start to bite in to the way that financial services are delivered. That's why our market today is already in flux. And I think there's 3 areas that are already in flight and changing that affect every single person in this room. There is a big divide growing between transactional banking and financial services. Transactional banking is moving towards real-time, 24/7 global services and capabilities. It's not here today, you can't get it today, but it's arriving. With that comes a split-off in relation to financial services. You know, sometimes I sit in focus groups and all the rest of it, and I listen to people talking, and I think they forget that they've actually, consumers, got to buy what they're brainstorming. You know, we don't buy financial services 3 or 4 times a day. We buy financial services when they're important to us. That's a loan, a car loan, a property loan, some interim finance. And those decisions are important for us, right? They matter to us. Transactional banking is our lifeblood. Every single person in this room relies upon it to A, receive their salary at the end of the month, which is particularly important, and B, for the rest of the month to spend it or stop their wives spending it if they can. So that change is already in change. The real-time impact is coming on to us because of the, if you like, the whole change in the way that we really consume data. You know, if we go onto the internet, we expect a response like that. We're not going to sit and wait 5 minutes for the answer to come back or longer. You know, when I set up the internet in 1995, it operated at 14K4, which was really slow, but we still told everybody it was the information superhighway, and they believed that then. The reality now is you can't get away with that. They need that information now, and they want choice. And I listen to a lot of people talking about PSD2 and open banking, and it's really exciting. But our industry has had buzzwords before, and our industry will have buzzwords in the future. And the fact that you're doing something that may be PSD2 and the fact you may be associated with something that may be open banking does not guarantee a business success. You've got to have a compelling differentiator in relation to the services that you're providing to your customer. If you don't do that, you won't have any customer happiness. So you end up with challenges in relation to that. What's that all really mean? Well, this is what I think is going on in relation to what I call the Google effect. And the Google effect is our expectation of the way the internet works today. And you've got a split between transactional banking and financial services. And both of these markets are transitioning at quite similar rates. Transactional banking is dropping from legacy platforms into the cloud. Why? Because it has to in relation to the delivery of faster services. And in relation to that, batch services are then being replaced by 24/7 by 365 RTGS. What that means is that your customers will make a payment from Australia to the UK or to America in less than a millisecond with what's known as settlement finality. That means the money goes and the person at the end of it can start to use it. So in transactional banking, achieving that is a real key focus and will be achieved by specialists, I suspect. In financial services, that change is moving from tied services to open market. Right? The big banks who used to provide or try and provide all of those services to their customers, that's changing. Wells Fargo used to have a board up in their sales room which said 8 is great. And what they wanted to do was to make sure that every single customer had 8 of their products or services, irrespective of whether they needed them or not, but they wanted to lock their customers in. So there's a move from those tied services provided by the historic large incumbents down to the open market, which I suspect most people in this room are playing in today. That also plays into another market opportunity, which is the switch from variable service delivery, my branch doesn't open on a Saturday, right, to open service delivery, which means you can consume the financial service that you need at a time that's appropriate to you. Over the course of the next 2 years, those changes will start to merge together, but both of them require real deep specialization. I don't believe that you can create a bank that plays across both of those fields today, purely because the consumer choice, the consumer demands are so wide and varied that no single organization can deliver that. The reason why they did it in the past was they had a branch network. We were 20 years ago, and we were not able to go and search online. And it's that transition which has created this market change, which many people will be the beneficiaries of. So what did we do at ClearBank? How did we try and bite off our piece of this cake? Well, we invented a new service model. All right? Nobody had set up a new clearing bank in the UK for 250 years. And having gone through the regulatory process and produced a document 2,500 pages in length weighing 14 kilograms, which was our regulatory submission, I understand why. It was somewhat challenging. But what we wanted to do was to open the marketplace up. Before we arrived, there were 400 regulated businesses in the UK capable of offering current account products and services to customers they already had. So that's a huge untapped market of people who were already customers. This isn't the challenger banks coming along and doing something new. This is pre-existing regulated businesses. And they hadn't been able to move into that marketplace because of cost, complexity, service delivery, relationships, all of those things that slow markets down. So we created a new service model, which is really very, very simple, and that is get regulated, open an account, and pick your IT. And IT is really, really important as far as we're concerned. We developed an open standard ISO 222 API, which allows people to connect to consume the services they want and disregard the services they do not need. But we also delivered a pre-built integrated current account platform, core banking platform, so that any of the 400 regulated businesses in the UK who had been held back from delivering current account services could move into that marketplace easily, effectively delivering out of the box core banking to pre-regulated businesses. What that did, it allowed those organisations to consume the services that they required, to deliver a service which had a compelling reason and benefit to their customers. And I was talking to Hannah Nixon earlier this year, who's the payment service regulator. And I think next year, if you look at the payment service regulator's report, comes out annually, you will see a real change in the core competition in the UK marketplace as organisations move in to compete with what are the traditional bankers by having very, very clear differentiation and new product offerings. So what does that mean to people in the lending industry? Well, I'm a transactional banker, so I know a little bit about lending, I guess a small piece. So why will that change? Why will the same stuff that we've experienced in transactional banking, how will that spread across into the lending environment, which is key to us, but we don't provide those services? I think financial services have to follow suit. I don't think it's an option. I think they have to, and certainly listening to the conversations today, it's on the way. There has to be more market choice. That just doesn't mean saying we've got 25 different things that are the same. It means doing things that are different and presenting them in a different way. Those that do it well will win the customers. As a consequence of that, they will gain greater customer exposure. The whole marketing model in relation to the way that you sell financial services is changing in the same way that people in the transactional banking environment consume transactional banking services. What do I mean by that? All of your consumers use social media to talk and compare. You can't stop it. Many times you want to encourage it. Though the organisations with the best competitive products will win in that game because they'll be talked about. But the differentials between the service offering need to be clear, because as professionals in this room, we understand that maths is very simple. It's the same, 1 and 1 makes 2. But the way that we present our products to the marketplace, the way we encourage people to consume, has to be and will be substantially different. And that's going to be driven by a major change, and that's the new market of the anonymous. What do I mean by that? We're enabling regulated businesses to connect directly into us to offer current account products to consumers. We do not service consumers. ClearBank will never go in to the consumer market sector. It's not part of our plan. All right? What we're enabling those organisations to do is to go and compete directly with existing banks. They will provide existing financial services, existing current account products. They may well not have all of the lending services and lending products that they need. And so they'll go to the market. They'll either use PSD2, they'll use open banking, or they'll form their own marketplace. It doesn't really matter as long as they get a good product set into that environment. But the transactional bankers are sitting there with what I regard as the holy grail. They've got the data that actually supports many lending decisions. What they will allow their consumers to do, all right, is to shop anonymously for financial services. And so you'll have a building society or a bank or whatever whose customer decides they want to get a car loan. And they'll go into the marketplace and they'll say, I have a transactional banking score of 7. And that will be linked back to a scorecard, publicly available. Everybody will know what that means. And the organisations providing the car loans will see that as a sales opportunity and be able to respond back to a person they haven't met, a person they can't influence. And they're going to need a really, really slick presentation to win that customer. And they're also going to need the power of the social media that I mentioned a second ago, supporting how that presentation works. All right? It will completely change the way that we interact. But it's vitally important that that shift occurs. Because what effectively is happening is we're moving, as you've heard from other speakers today, we're moving all of the power of financial services to where it should lie within the consumer and the customer. And if we take our professional hat off, we'd all like to have that position and role. So we're empowering our consumer and customer to make those choices. Putting our business hat back on, it really puts the pressure on, because we've got to make sure that the services and products that we deliver are really slick. And we have to deliver service efficiencies in a way that will meet the needs of a whole raft of variety of customers with different product sets. And if any of you have done fast-moving consumer good marketing or whatever, you may know of a word called count line marketing. What that is coming up every 2 or 3 years with repurposing products and all the rest of it. And my expectation is financial services will move into that. And so consumers will be count line buying products and services that meet their financial services requirement almost at will and at random. Big opportunity or a big threat. Final slide on all of this is I can guarantee that the next few years are going to be fascinating. Why do I know that? Because on the 28th of February, we announced ClearBank to the planet. Nobody had heard of us. We'd hidden away in our little bunker in Ropemaker Street and built a UK clearing bank. Since then, we've had hundreds of regulated businesses approach us, and we only deal with regulated businesses, seeking to change the way that they engage with their customers, seeking to alter the way that they get their customers and their revenues in. And many of them coming up with really innovative business models, business opportunities, which we haven't even thought of. Really clever thinking. So as far as I'm concerned, the last 300 years were really interesting. The next 2 to 3 years are going to be fascinating. And I really do wish you all well on your journey. Thank you for listening to me.